Hello, trading has closed on the 20th of March, 2025. As always, we'll do our disclaimer. We'll go over our calls and then make our predictions. It's my trading plan for Friday. Friday is March 21st, 2025. Remember, my plan can change. I do this a day at a time. I can change my plan. My plan can be wrong. Trade at your own risk. Also, from now for the next few weeks, I'm going to have a lot of personal business. I'm going to try to do a video every night, but I'm not going to be able to follow the market during the day and get the feel I normally get. Some days I will, some days I won't be able to do that. We had a few calls. Look for the pattern with the early low, which is this. Tends to be a rally day with a high in the final hour. We got the normal pattern, normal time. We didn't get the rally. Time runs out early tomorrow. If we get either direction, take this high out early, we have the normal pattern. If we can't do that, it's negative, and we should see lower prices print, but that doesn't guarantee we have a lower close. We hit a target, which was around 40 handles away based on futures, 56.4880. We got the target, and there was support at and just under the target. So far, that support's held. We said that the FOMC announcement price, 56.3840, would separate a bull phase from a negative phase, bear phase, and we said minor violations of the number didn't count. We had the minor violation of that number. That doesn't count. So far, support that the MEJT target has held. Doesn't mean it'll hold tomorrow, but it's held for now. He said if we maintained a significant drop below 56.3840, and as long as this high held, he had a reasonable target of 55.6147. That still is a valid pattern, but as we'll see, it's not the only valid pattern. We have a new target, 56.77.20. That's way up here. And if we don't gap down smartly tomorrow, that's my call. Early on, MEJT gave a buy signal. There was an optional lower target. Those have all been satisfied. Now says this drop isn't the real thing. Gives us the target, 56.77.20, most likely to print Friday. If it doesn't print Friday, it should still print at some time. We had this big drop, but if you look at the close, we haven't been able to close under any of today's lows, or even under any of these prior lows. Now, it was negative. We couldn't take out the highs. It's positive. We can't take out the lows. And so we're just consolidating between support and resistance. This MEJT target is resistance. This green line is an old FOMC announcement price from last year. We're just between them. I don't know how it'll open tomorrow, but for now we haven't gone under sustainably under the FOMC announcement price. We've held support. We've closed over the lows. We haven't entered the bear phase yet. If we do, we'll have the lower target. But if we don't, it's an entirely different picture. That conflicts with the fact that this is a negative pattern unless we take this high out early. So let's see the chance of that happening. Well, here's where we are in the count. We think we're in a wave 3. It's a bullish phase. Don't forget, sentiment indicators are those seen only at major lows. Doesn't mean we have to go up tomorrow. Well, this was the count we had. We had one, we had an A, and we had a B. We wanted to find a C wave to complete wave 2. And if you look at today's action, here's where we had wave 5 ending. And if that's your A and that's your B, C equals A, right at the low. Now, just because that count works, it doesn't mean some other count won't. But what's interesting is that if you take the height of A and compare it to C, 786, the fibs work. This is a valid count, and if it's the right count, it means we've completed ABC for wave 2, the fibs work, and we're starting wave 3 higher. It would be a lot more convincing to me if this could be counted as an impulse, which I can't yet, but there are ways to fiddle with this, and if we gap up, I can make the count work. So the point is, just because this count works, it doesn't mean some other count won't. But the commonest thing will be a gap outside the day's range, and if the gap's higher, we could be in wave 3, and that's not the only reason. This is a futures chart. This is my inverted diamond on stilts pattern. Here's the left stilt. Here's the right stilt. The high is a fib target of the prior consolidation. The origin of the left stilt is resistance and support. Usually the first challenge of the origin of the left stilt holds. And if there is a second challenge, it usually breaks through in grand style. Now, if it's challenged within a day, I count that as still the first challenge. But if 2 or 3 days pass, then it really would break out. But this is support resistance. If we gap up over today's high and this holds, that becomes support. And if it does become support, this pattern says you're going to have a huge rally. Now, we haven't gapped up yet, and nothing says we can't gap down. But if we do gap up, it could be on really big on the upside. And if we gap down, I think we're going to probably be stuck around 55.61, which in terms of percentage is like under 2%. So we're going to use the mixed signals rules. The pattern tomorrow has early low. It doesn't tell us if we open up or open down. It is bullish. There's a higher target. And don't forget, not always going to see this print in its preferred time frame, but there's no particular time frame for reversing through the origin of the FOMC announcement. I mean, it could happen tomorrow. It could happen well from now, many days from now, or it might not work, but this is pretty reliable. It's bullish. There's a higher target. Unless we gap down smartly, the rules call for it to print. Sentiment remains at levels seen only at major lows. Support is held, and we're still over the FOMC announcement price at 56.3840. Unless we significantly undercut that price, we're still in the bull phase of the FOMC whipsaw. It is bearish. Today's normally bullish pattern, but was not bullish at all. It was bearish. It should lead to lower prices tomorrow unless we gap and promptly overtake the high of day. It doesn't mean you close lower just because you have a bearish pattern. You can trade lower and then recover. The commonest scenario of Friday is a gap outside the day's range. Sometimes you have to wait a day by these rules. If the gap is down, it's plausible we maintain a move significantly under 56.3840. We could well be on our way to the 55.6147 Fed whipsaw target. But if the gap is up, and if we maintain prices over the inverted diamond on stilts, we likely would have started a rally in wave 3 of multiple degree. The wave count supports this, and the inverted diamond on stilts does as well. Of course, we haven't had any gap yet. Hasn't happened. But that's the most likely resolution, even if we have to wait until Monday. So sometimes it doesn't work. I mean, that's option 3. But the odds are either we trade little close Friday and gap up Monday or down, or else we have the big gap tomorrow, We have this target that's most likely to print tomorrow, so there's a possibility at least, if that was the right count, if that's the right count, there's a possibility we see 56.7720, and a significant possibility we gap over these highs and just keep running. But that's just a possibility. If we gap down, the other thing happens. So I think the opening is going to be very telling. When sentiments like this and when the wave counts like this, at some point we're going to start wave 3 up, I think it's pretty risky to be short overnight. And if we do gap down and you miss it right on the short side, you can just miss it. But it's a risk-reward situation. The rewards here are huge once we take this out. It's the pattern tomorrow with the early low. We should be close to resolving this. And that's today's call.